Hey traders, Jason here from Lever Brothers. So I'm going to look at some studies in this video that will help guide us going forward. Okay, all studies are is like a statistical evaluation of what has taken place in the past, and oftentimes what has taken place in the past points to a certain direction, a certain path, a certain sequence going forward. Doesn't always work, but if something happens in the past and there's like 95% chance of something happening in the future because of that, it's something that we can kind of lean on. Okay, so let's go through a few studies. Some of these triggered over the summer, but they don't really kick in until now. Others just kicked in now. Let's just go through them. All right, so first, this is from Ryan Detrick. Just for starters, November is the strongest month of the year, whether you're looking at since 1950, which is this kind of tan bar, last 20 years, the blue bar, last 10 years, the green bar, whatever look back period you consider. November has been the strongest month of the year, going back 10 years, 20 years, 50, to 1950. So we can lean on that. It's a good time of year traditionally. So we have that to lean on regardless of all other factors. All right, specifically, and this is from the Trader's Almanac, the 3-month combo of November, December, January is the best 3-month combo of the year. Obviously, there's going to be 12 3-month combos, January to March, February to April, etc., etc. The 3-month combo of November, December, January is the three best months. 3-month combo is the best of the year, whether you're looking at the NAS, which is in green, the S&P, which is in orange, or the Dow, which is in bluish. Okay, so November is really good. November, December, January tends to be very good. And again, this is regardless of all other factors. All right, digging in a little bit more, and this is from Ryan Detrick, we're going to consider when the S&P is up 15% at the end of October. Okay, so the first 10 months of the year are up 15%. These are all the dates since 1950. This number here is not updated per the end of the year, but it's pretty close. The S&P did gain more than 15%. So when the S&P is up more than 15% at the end of October, November has been up 81% of the time. December has been up 71% of the time, and the combination of November, December has been up 95.2% of the time. In fact, there was only one down period, and that was way back in 1986. So when the market is up 15% at the end of October, odds are very good that November and December are going to be good too. Now, if I loosen this up and say, well, what if it's only up 10% instead of 15%, loosen up the criteria, the numbers are still just as good. Like the win rate is like 28-3 or 28-3. And the average gain is in the high 4% area. Okay, so when the market's up a lot at the end of October, odds are it's going to continue on for the rest of the year. Next up, this is another one from Ryan Detrick. We generally break the market into two different 6-month periods. You have the strongest period of the year, which is November to April, and then you have the quote-unquote sell-in May period of the year, which is May through October. But what happens when May through October is strong? Okay, so these are the 10 best May through October periods, okay, since 1950. And this is what happened. Ooh, that's a bad error there. And this is what happened afterwards, okay? And you can see that there's only one down period. That was last year, and that was because that included the Liberation Day tariffs and stuff, which drove prices down. Okay. But of the other 9, the other 9 closed up with an average gain of like almost 14%. So when the weak time of year, when the weakest 6 months of the year May to October are very strong, the following November to April tends to be pretty darn strong too. Next up, this comes from Wayne Whaley. Okay, so he looked at when the market is, what happens in the period, what happens in the months, the months and periods in the year after the market is up, May, June, and July. Okay, when each of those months are positive. So here you have May, June is here, July is here, and you see all these positive numbers. So then what happens after that? Here's August, here's September, here's October. Okay, so when May, June, and July are up, November, December tend to be very good. In fact, each month, if you can see down here, I don't know if you can read it, have a 14-3 win-loss record. So definitely leans toward the upside. So that's just November, December. If you look at the strongest time of the year coming after this is October 27th to January 18th. That has a 17-0 record. Okay, so it's undefeated. So when the market is up May, June, and July, the following October 27th to January 18th has never posted a loss. It's been 17-0 with the average gain of about just over 7%. And if you want to look out an entire year, this would be August to July, because remember, this time period is May, June, July. So then starting the very next month, August, September, October, all the way 12 months to the next July, that has a 14-3 win-loss record. Okay, so to sum up, when the market is up May and June and July, November, December tend to be very good. October 27th to January 18th are undefeated, and the entire next year is 14-3 with a good average return. So based on these 3 months, like, things look good, at least, going forward, certainly for at least the next couple months. All right, here's another one from Wayne Whaley. So he doesn't like to just stick to the traditional quarters of January 1st to the end of March and then April 1st to the end of June. He likes to try and see well, maybe there's a different time, maybe there's a different date range that is better for quarters. And he found out that if you go the 27th to the 27th, that's actually a better quarter than going first of the month to last of the third month later. Okay, so his quarters are October 27th, January 27th, and then January 27th to April 27th, and then April to July, and July to October. So we are just now entering the strongest quarter of the year, October 27th to January 27th. It has an up-down ratio of 58-18, and the average gain during that period is about 4.7%. So regardless of all other factors, this is the strongest quarter of the year anyways. Okay, so if I were to sum up, November traditionally is strong anyways. It's the strongest month of the year. The November, December, January combination is the strongest 3-month stretch of the year. When the S&P is up 10% or 15% at the end of October, the rest of the year tends to be very strong. When the traditionally weaker, it's not necessarily weak, but it's weaker, May through October period is strong, the following November to April period have very high odds of doing well. When May, June, and July are up, November, December tend to do very well. The October 27th to January 18th period is undefeated. And the entire year after May, June, and July, the entire year starting in August tends to do very well too. And then even without any of these, the prior strength, whether it's strength over the summer or strength at the end of October, strength anywhere, just regardless of all that stuff, October 27th to January 27th, October 27th to January 27th is the strongest quarter of the year. So no matter how you kind of slice it and dice it and look at it, things are looking good. The market's done well this year. Obviously a big drop into the April low, but we've had a great rally afterwards. And whether you look at the strength over the summer, the strength during the weakest time of the year, the strength at the end of October, all things point towards a continuation of the strength. I make no bets on what happens in January, February, but at least for the next couple months, I think we can lean on high odds of the market continuing to do fairly well. All right. Hope you got something out of this, and I will see you next time.